morning, traders. Alla on beautiful May 3rd. It's been 20 minutes after market open. We're opening up in exact same place at key Fibonacci resistance where price was yesterday. Yesterday I warned you this is not the place to buy. Yesterday this is a place where market collapsed from. We also discussed that if after the close of the trading room price is here and you know the rules, you trade with institutions. You buy at key support. Every single level in front of you is proprietary Fibonacci level and proprietary Fibonacci strategies I developed in 2008 when I witnessed market crash, when I recognized very clearly fundamentals and indicators do not work. When I recognized very clearly that price keeps repeating exact same patterns, exact same structure, time and time again. Second morning in a row, market giving us a pickle. Look at this dance. This is your key day trading chart. You can convert to any chart you choose to trade. If you convert this to one, look at this pain. Market open. Price reminding you never short into Fibonacci support. Price reminding you do not acquire position close to Fibonacci resistance. Market in pain. Worthless correction. Cannot short into support, cannot buy near resistance. Overextended bullish push, not a good news for knowledgeable day trader. This is the reminder. 40% of the time market dancing in correction. Second morning in a row, very dangerous open. Overextended bullish push. What do we need? Powerful pullback. If price is not collapsing outside of this support and you choose to buy here, you're buying overextended bullish push in the middle of that trend. And if you remember that the end of the minor trend being in a play yesterday, entire morning, darn it, second morning in a row, we're in the exact same place. Second morning in a row, price reminding you, a lot of events playing out in Europe. Bullish rally stepped in from key trend inception, not into resistance. If market dancing here, this is pretty darn dangerous correction. 4 hours in a row. Quite a pickle. Quite a reminder. Trigger happiness, never recipe for success. Knowledge is. Exact same place S&P is doing right now, 4 hours in a row, no matter what chart you trade. Let's convert this chart to 5. This is the open. Ouch. Last 20 minutes non-stop chop. Cannot short into support. Every single short fails. Cannot buy near resistance. Buy at trend inception. Lower the price collapses, better off we are. What else do we know? This resistance is out, price skyrocketing to here. Right now, massive correction, second morning in a row in exact same place. Trend inception is ultimate place to be. Even better, institutional trend inception. As low as possible. Knowledgeable trader knows that. Because it correlates with long-term chart present in front of you for years. This is your investment decisions. This was trend inception 2016. And this was exact same problem on S&P in 2016. Do you remember Fibonacci at 2200? Do you remember what I said? 2200 is broken, S&P will skyrocket to 2300. How many weeks and months did it take S&P to break through this level? Many. More than 6 months. Identical case scenario this morning on your day trading chart. Knowledgeable trader knows we are in massive bearish correction. Knowledgeable trader knows this is institutional support. Prices anywhere near this level, you as day trader do not leave this chart. Do not leave this screen. And that's a market this morning. Ouch! What a spectacular reminder. This is how Fibonacci keeps you out of trouble. Do not buy into resistance. What you're witnessing in front of you is 10 years of work with price action and Fibonacci. What you're witnessing in front of you is exactly the reason hedge fund managers taking the course. They know extremely well, as Joseph says, hedge fund manager in the course, that darn hot pink line causing the problem this morning. That's the reason I made it so bright pink, as I learned very clearly in Johns Hopkins research, where I worked for 5 years. Colors have extremely strong impact on human brain. Never forget and never ignore this bright pink line. Tesla in a whole lot of pain for many months. Exact same structure as S&P. Second morning in a row. Do you remember what I said about Apple before the earnings? Do you remember that? Bright pink line, 181, and bright pink support, 160. What did I say? Bias is bullish at the support. This is Apple after earnings. Shock or not. This is where Apple is this morning. Anyone surprised? Months and months of war zone at key Fibonacci resistance. This is where Apple's sitting for the last 4 weeks. Buy at support. Do not buy into resistance. Identical formula. And that's what you're seeing in front of you this morning. Market in a whole lot of pain. This support is a problem. Market conditions this morning is worse than yesterday morning, traders. This is day trading nightmare. This is your range. Lower the price collapses, better off we are. So, let's keep our fingers crossed. Price retraces lower. This level is out. This is where S&P will skyrocket to. Just like again it had done on long-term charts in 2016. Broke through 2200 and skyrocketed to 2300. All the same formula. That's what you're witnessing in a day trading room every single day. The accuracy of the method that applies to any instrument, any time frame, any platform. So, pain and torture this morning. Knowledgeable trader knows that. Knowledgeable trader passed the test of instant gratification, not babysitting this fluff. If market crashing and burning, it's extremely good news. As it's done yesterday after the close of the room, when price reminded you, hand holding does not work. Flawless market conditions after trading room close at trend inception, where again buyers came from day trading trend inception that correlates with institutional support. You want to trade with institutions and not against them? You're in excellent shape. More powerful the retracement, better off we are. Agree? Right now we have 50% buyers and 50% sellers. Lower S&P collapsing, more powerful market will become. And that's the market this morning. And that's ultimate reminder, market conditions always and forever change. How to separate corrections from spectacular reversals will determine success in trading. Never ignore these market conditions. Never buy into Fibonacci resistance. Never succumb to instant gratification. And remember, Fibonacci is the only natural predictive tool in the markets. It is not an indicator, nothing in common. Only if you play by price action and Fibonacci rules, you succeed. Never participate in correction. Buy from Fibonacci levels. Sell from Fibonacci resistance if rules are met. This morning we continued dancing extremely close to this support. This is what's causing the problem. So here we are. I'm converting this chart to 5-minute chart. Look at that. Do not short into Fibonacci support. Clear on that? Look at that range. Look at that dance this morning. This is market open. And this is the reminder. Only Fibonacci will keep you out of trouble. Level present in front of you since yesterday morning. What a chop! What a pain! Fibonacci keeps you out of trouble. That's simple. Back and forth chop. 30 minutes later. Quite the pickle. Quite expected. Fibonacci support kept trader out of trouble. 35 minutes later. Test is on. Look at this open. Only knowledge and price action will keep you out of trouble. Trader who follows indicators on morning like this, making his broker very, very happy. Trader who operates as a knowledgeable price action trader and utilizes sniper psychology, no, this is a test. Fibonacci once again kept you out of trouble, kept you on the right side of the market. Massive chop, massive war zone. 40 minutes later, back and forth. Because we are in the middle of the trend. 50% buyers and 50% sellers, not a pretty place to be. Back and forth, non-stop chop. Cannot buy, cannot sell this market. That's the market this morning. So this is ultimate corrective chop. This is ultimate reminder. Only when you master corrections, only when you know when not to touch the markets, you will succeed. Extremely narrow range this morning, frozen markets between key support and key resistance. What is the wisest thing to do? Not to touch the market. Market in pain. The day you master in corrections, your trading goes to entirely new level. Until the day you understand when not to touch the market, you cannot be successful trader. This is the reminder. Price reminded you buyers fully in charge. As I said earlier, this morning price setting up to blast through this level to drastically higher level. What is the problem for day trader? This resistance to the tick is a big, big problem. That darn bright pink line. Again and again and again. Knowledge is power. Hand holding never a recipe for success. Flawless market conditions set trend inception outside of trading room hours. Not now. 4 hours in a row, market in pain. Market reminding you to the tick. That darn bright pink line. Same bright pink line as on Tesla, as on Apple, as on S&P Weekly. Very, very close. So, this is what you're witnessing in front of you every day. This is a core of Fibonacci method. This is what you're mastering in a boot camp. When not to sit and stare at the screen, knowing when not to trade, when your trading success starts from. So, if you would like to master Fibonacci levels, proprietary Fibonacci strategies, this is the best time of the year to sign up for Fibonacci trading course. If you sign up for Fibonacci course, bootcamp included. Fibonacci Trading Bootcamp July 9th through 20th. Master proprietary Fibonacci strategies along with strategy that's not part of regular course. Basic course, group course 8 weeks, private mentoring 16 includes Fibonacci Trading Bootcamp. Second event this year, no plans for another bootcamp this year. None. After bootcamp, I will take a well-deserved long vacation. So, you want to join us in the course? Review information on the website about bootcamp. Bootcamp July 9th through 20th. Intense 10 days of live trading education, when I will be testing you to the core, when not to trade the markets, when to enter the position, when to stay out. Graduates of the course joining bootcamp at additional fees. Savings of $888 for new students. So, review the information on the website and master everything you can use on any instrument, any time frame, any platform. All included for new students only. If you ever have any questions, I highly encourage you, listen to the graduates of the course who trading anything and everything from S&P to options, to Forex, to stocks, to ETFs, anything. That you can use what you learn on the course for. Browse YouTube channel going back years and never hesitate to contact me after reviewing information on the website 925-257-4298 or info@fibinstitute.com. Quite a pickle, quite a reminder. Only Fibonacci will keep you on the right side of the market. If you choose to participate in these corrective markets, in these overextended market formations, you better know where the end of the minor trend is. You better know what not to short into. That's the market this morning, second morning in a row. And second morning in a row, bright pink line kept you out of trouble, time and time again. Nothing else is possible. Second morning in a row, I warn you. Absolutely nothing else is possible except decision point 1. Yesterday, 3 trades reached only decision point 1. Nothing else was possible. This morning, once again, I warn you. What a nightmare we're dealing with. This is a trade number 24. When we're in such horrific market conditions, nothing else is possible. Everyone clear on this? Out of 23 trades, 22 trades reached Fibonacci targets, not 20. This is a trade number 24. This is a trade that's also only reaching decision point 1. Everyone seeing this? ultimate correction, ultimate reminder. Nothing else is possible. So, all you have to do, play by the rules. Respect bright pink line. Joseph knows that. Take a look on the timing this morning. 9:20 EST. Ask my students what we discussed. Ask Carol, ask Kevin, ask Joseph, ask Anna, ask Ed, ask Jean. What did we discuss? Take a break. What is the timing right now? It is 10:20 EST. Market remains a nightmare. Bright pink line, darn it. No matter what chart you trade, nothing else is possible. Only when you master corrective fluff, you can succeed. So, keep your fingers crossed. Price will finally crash through this support. And if you know that hand holding never recipe for success, and if price will collapse to reversal zone, only then market will become interesting. Rules are met, take a trade. More interesting, more powerful events in European session, more powerful market will become. Buy at support. Do not stare and babysit corrections. 4 hours in a row. Second morning. Ultimate reminder. Knowledge is power. Both trends remain minor. Both trends dancing between bright pink lines. Nothing else is possible this morning. So, this is when your success starts from. When not to babysit the fluff. When not to sit and stare at corrections. Only then you're moving to the next stage. If you operate as sniper. If you understand that day trading, psychological warfare. Only if you stop chasing indicators and start relying on your knowledge. No one else will do that for you. No indicator on the planet will tell you when not to trade. Only Fibonacci will. Levels identified days in advance, showing you do not buy into. To the tick, 1 minute chart kept you out of trouble. Again and again and again. So if you would like to join us in a bootcamp, please remember, we're down to 14 places only. Maximum 20 spots in a bootcamp. All the information under Learn. Listen to students, review the information, and never hesitate to contact me. Best time of the year to join. No plans, none whatsoever, for another bootcamp. In 8 years of teaching, this is bootcamp number 12 only. 0 plans for another bootcamp this year. So, if you know where the end of the minor trend is, the sky's the limit. Don't sit and stare at day trading nightmare. Only trade if rules are met. And remember, bright pink line is very bright pink for a very good reason. Never to be ignored. No matter what instrument, no matter what chart you trade.